February 2009, March 2018, summer 2015, March 2020, and right now, some of the nastiest stock markets I've ever partaken in, that stocks reach prices that I honestly just couldn't even believe. And we're going through one of those time periods right now where stocks are starting to hit prices that I'm just like, I literally can't even believe this stock is trading at this price. You always go in to the market or stocks in general as an experienced investor and expect certain prices to be hit, right? Maybe the stock falls 30%, 40%, maybe 50%. Some of these stocks are now getting down to prices that I couldn't even conceive that they would go down to these sorts of prices, and it's starting to happen. And it's one thing when it's mids and smalls, but it's another when it's some of the biggest companies in the world. This is now happening too. And so we got a lot to discuss in today's video, guys, a lot to get into. It's going to be an action-packed video here. I just want to talk about a whole bunch of different things. Thank you, FTX US, for always being the partner of the channel. Check out first link in the description down there. Get up to $100 in free crypto. Shopify is where I want to start today's video out here. Shopify is under $500 a share now. Under 500, this stock is now down 68% in the past 6 months. Shopify, this is one of the biggest companies in the world. Like, even still, after this collapse of its stock price, it is still a $60 billion company. There are not many market caps that are $60 billion out there, and it's an extraordinarily huge company. Stock's down about 9% here today, and it's just showing no signs of bottoming. And you look at a stock like this and it's like, this is an incredible company, incredible business model. They've had incredible growth, will likely still have incredible growth for the next decade plus. And they literally cannot find a bottom on a massive company like this. You look at something like Netflix, and even after that massive drop off yesterday, right? This is still a stock here today that falls another 4.4%. After that massive fall, there's no dead cat bounce today for Netflix. It's just down another 4%. And this is a stock that's now down 66.5% in the past 6 months. This stock is at $216 a share, which you're going to need to go back to. You'll probably need to go back to 2018, maybe 2017, to get to a time period where Netflix was trading around $200 a share, which is where the stock is at now here today. That is absolutely incredible. Tesla. Think about this for a moment. This is very, very important for everybody watching this right now. Think about how much Tesla could have been up today if the market was just a decent market, right? This stock's trying to hold on for dear life with a 4% upward move, but I can only imagine what the stock would have done and the day it would have been for Tesla today if it wasn't for the fact that this market is absolutely a dumpster fire here today. I mean, it is awful out there. And you look at it, almost everything big tech related, all just getting smashed in a massive way, especially higher growth stuff like a Tesla would be. And so they come off of an A+ earnings, right? Perfection. Like, it couldn't have been better. Like, every single number couldn't have been better. The revenue beat, the EPS beat, the margin beat, the guidance, the conference call. It doesn't get better than what Tesla just did. And how is the stock rewarded with a 4% gain? And that's how tough sledding it is in this market. And that is how much people don't want to take risk right now, that this sort of company that just reported a quarter that was literally perfection gets rewarded 4%. In a normal market, these stores, you come out with that sort of quarter, you're up 10% at least the next day, maybe 15, 20%. But in Tesla's case, they can report perfection and it's just not rewarded, but that's every stock in this market right now, right? Now we have an issue. We have a problem. There's been 3 big tech stocks kind of holding the show together. One Tesla, one Apple, one Nvidia. Tesla, Apple are keeping it together. We are starting to lose Nvidia. Nvidia is starting to, we're losing it, and I think we're going to probably lose this baby, okay? So Nvidia is down 5% here today. I think Nvidia's guidance could be troubling. I think there's going to be a lack of confidence in Nvidia for the next, let's call it year, when it comes to their numbers. Long term, this obviously is a great company doing great things, but it doesn't matter. Like, long term, blah, blah, blah. It doesn't matter right now in this sort of market that just wants to look at the next 6 months. And so for a stock like Nvidia, I think we're going to lose this baby, and we're already starting to lose it. And that's a shame, because then we're only going to have basically 2 big techs left that have been kind of holding the show together. And, so that's something to kind of pay attention to. And Nvidia obviously pulls down AMD. It pulls down semiconductor stocks in general. It pulls down the entire tech sector, and obviously gives a negative vibe to the entire NASDAQ. PayPal Can't find a bottom. One of the greatest business models in the world, literally. Can't find a bottom for the stock. It is flirting with potentially going under a market cap of $100 billion now, which is just crazy. If you told me PayPal was going to fall to $89, I'd be like, come on, man. Nah, that's not happening. Maybe $150, okay, $175, $89, nah. But that's what we have going on here with PayPal. The stock, one of the greatest business models in the world, not even a high valuation name. That's the crazy thing. It's one of the greatest business models in the world with an unbelievable opportunity in the next decade. It's not even at rich P metrics or anything like that, right? And so that's the craziest thing with a PayPal, and yet the stock has been obliterated 63% in the past 6 months. Look at this here, okay? Look at this. This stock was basically around the same price in January of 2018. In January of 2018, PayPal was around these prices that you could buy PayPal at right now. That's just stuff that you don't usually come to expect. I mean, a 52-week low for a stock, that's one thing. It's like, okay, the stock's at a 52-week low. Cool, right? Which PayPal, as soon as it hit like $200 range, was at a 52-week low. And that's what you should expect. Sometimes these stocks are just going to get out of favor, or the market's going to go down. It's going to hit a 52-week low. It's one thing when it's a multi-year low and a multi-year low, and you've got to go back like 4 years ago in time to try to find time periods when the stock was at these sorts of ranges. That's just absolutely incredible, right? Alibaba. You want to talk about a great company that you really got to go back in time for? Alibaba. This is the Amazon of China, I call it, right? A little different business model, but basically what Amazon is to the United States, Alibaba is to China. This is a company that is at $85 here today, down another 4%. Can't find a bottom anywhere. It's the same price, right, that this stock was in July of 2016. In July of 2016, like think about that for a moment. When you got to start going back 6 years ago in time to find time periods when some of these stocks were down at these sorts of levels, you know you are in an absolutely incredibly vicious downtrending market. When you have to go back 6 years ago in time and say, oh, this is the last time the stock was trading at this sort of value, crazy. And I mean, think about how much progress a company like Alibaba made in their business model over the past 6 years, and all to just be wiped out as far as the stock price goes, at least by just no one wants to take any sort of risk. And so even in Alibaba, in this sort of market, they're like, oh, it's a Chinese stock, I don't want it. And it doesn't, it's trading at the lowest it's traded in 2016. I still don't want it. That's just the vicious nature of this sort of market, right? There's no hope. There's no hope for retail trader investor stocks in this sort of market right now. I mean, almost all these stocks are at all-time lows. All-time lows, not just 52-week lows, but almost all these stocks are at all-time lows. There's no hope for these stocks in the short term. None. I mean, Cathie Wood's ARK Fund's at a multi-year low right now. There's no hope for any of these. It's just new low after new low after new low after new low, and that's just the way it is right now. And I mean, a lot of these stocks, yeah, they're trading at insane values. A chef under 10, come on, man. But that's the market we're in right now, and there's absolutely no hope for these sorts of stocks in the short term. And some of these companies are going to be beasts long term, but that story doesn't matter in this sort of market right now. The market is only focused on the next 6 months, the possibility of recession, and stocks prices going down more. Now, if you want to talk about one green space in the entire stock market, look no further than the airline stocks, which, obviously I've been telling you guys, like, it's going to be a hot travel summer, as I call it. It's going to be busy out there. And the airlines are being rewarded here today. UAL's up almost 11%. Hawaiian Airlines, American Airlines, Delta, they're all doing amazing. Southwest. And, that's the one space that I think could stay hot in this sort of market, even if the market remains kind of cold. Now, I'm not playing any of those stocks. And, I told my private stock group, I think it was a couple of weeks ago that, I'm sure these stocks will do very, very well, but that's not my type of thing, is trying to play short-term stuff and trying to get in and out. Because the thing is, with these sorts of stocks, although it's going to be likely a very, very busy travel summer, at some point, if all of a sudden recession fears creep up, these stocks can go and all of a sudden go from, being the B stocks to getting killed very, very quickly. So you got to be very, very nimble. And trading in and out stocks is not my type of thing. I make long-term investments betting on companies over the next 3, 5, 7 years. And that's my name of the game. But there's no doubt there's a lot of money to be made in the airlines. You just better be very, perfect about when you get out of those babies. Let's just put it that way, okay? The NASDAQ. So today was going to be a very, very good day for the NASDAQ. I mean, it opened up about 13.7 roughly, somewhere in there. And it looked like it was going to be a very, very good day for the NASDAQ. And we just completely fell apart. just completely fell apart. But what's going on here, right? Well, Mr. J. Powell. So Powell says taming inflation, absolutely essential, and a 50 basis point hike possible for May. Fed Chairman Jerome Powell on Thursday said the central bank is committed to raising rates expeditiously to bring down inflation. Expeditiously meaning like very, very quickly and effectively, all right? And so when you start throwing words like that around, after you were throwing around transitory 50 million times, gonna scare the market, right? That could mean an interest rate hike of 50 basis points in May, which is basically 0.5% for everybody that doesn't know. In May, as prices rise at their fastest pace in more than 40 years, he says it's absolutely essential to restore price stability. He says this is, part of me looks at this and I'm like, everybody knows this. Like, why is the market freaking out over this? We all know the Fed's going to raise at 50 basis points. We all know that. It's not like this is like some shocking news. Like, can you believe they're talking about raising interest rates? The market's priced in 5 to 7 rate hikes at least this year. We all know this, right? I think it's more the commentary, if anything, that's scaring people, and how serious Powell's talking about, raising rates and those sorts of things to bring down inflation. Now, the issue is, I've been pointing this out, is just because you raise rates doesn't mean you're going to magically make the price of a tomato go down. It's not the way it works, man. It's not the way it works at all. It's just not how it works. And so you can bring down certain things by raising rates, such as cars, for instance, right? You can bring down car prices, or just kill the car market in general. You can, imagine if all of a sudden tomorrow we had a 10% higher interest rate that everybody had to pay for buying a new car. Car sales would dry up immediately, okay? If you're looking at something like housing sales, which we'll get into in just a moment. Yeah, no doubt, if you raise interest rates, you're going to kill the housing market. There's no debating that. There's no doubt about that. But for a lot of, a gallon of milk, raising interest rates is not going to bring down a gallon of milk magically. It's not the way this works, okay? So, and if you talk about killing the auto sector, killing the housing sector, you do have to realize you're going to kill the economy. And you will send the entire economy into a massive recession, which then you're going to have a whole other issue on your hand. Then you're going to have to print money like crazy again. And so you get into a very, 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 very scary situation. What you're looking at here is mortgage rates. Mortgage rates are skyrocketing. There's no, I don't know how else to put it. Basically, at the start of this year, mortgage rates have started to skyrocket. And if you're talking about a situation where the Fed wants to raise rates, man, they're going to potentially kill the entire housing market this summer, and in a massive, massive way, because if they continue to obviously raise interest rates, at the end of the day, mortgage rates are just going to continue to skyrocket higher and higher and higher, and they will end up eventually killing the housing market. And they will also start to kill the auto sector as well, which is something I worry about. And if you're worried at all about Tesla numbers in 23, I think it's definitely something to think about for all my Tesla shareholders. I know there's a lot of Tesla folks that watch this channel. I'm very, very worried actually about Tesla's numbers in 2023 if they continue to raise interest rates, because most of these Teslas that are bought are not bought cash, right? They're bought on a loan. And if you're talking about a situation where interest rates continue to skyrocket, it could get very, very ugly very, very quickly. And that's something that will obviously, there's no debating, like it's going to kill the housing market. It's going to absolutely decimate the housing market as these rates continue to go up. If all of a sudden you start talking about a 7% on a 30-year, 8%, people just can't afford nearly as much. And when homes are already super unaffordable in general, it's going to end up having to either crash housing prices, or people are just not going to buy houses, which is going to kill the entire real estate sector, right? Now, Wall Street's already starting to price some of this in, a lot of this in actually. If you look at, I have a housing stocks list, and if you look at all the stocks that are on my housing list, basically every single one of those is right around a 52-week low right now. CCS, Lowe's, Toll Brothers, Pulte, Lennar, KB, Home Depot. TCN is not, because that's a rental company. That's one company that's been benefiting in a massive, massive way. So that's the one on here that's not. RH, Rocket, almost all those stocks are at 52-week lows right now. And the reason is because Wall Street's looking at this and they're pricing, they're like, the Fed's at jeopardy of crashing the housing market starting this summer. And the thing with the housing market is, It's the most important sector in the entire economy in the United States of America, and by a mile. I don't think there's anything that even holds a candle to it. And the reason the housing sector is so important is there's a ton of direct jobs that come from the housing sector. There's a ton of indirect jobs that come from the housing sector. But even more importantly than all those direct and indirect jobs that are created from the housing sector, and the housing sector being in a very, very healthy spot, right? And booming, like it's been booming. The third thing's even bigger than both those combined, and that's confidence. And if you're talking about sending the country into a recession, kill the housing market and you will do just that, because people start to feel very less confident about going out there and spending money when their homes are going down in price and going down in price and going down in price, and when they aren't seeing that construction, right? Something always gives me great confidence if I drive around in Vegas or Arizona or whatever, is seeing all the construction all the time. It's a great feeling. It's a great boost of confidence to see, oh, look at all those homes being built and look at those new apartment community being built. It's a great thing, and seeing all the workers that have jobs that are created on that, right? And if you dry that up, you start to kill confidence in people, right? And here's the next issue with this, right? So I bought $50,000 worth of stocks today, and I might do a separate video talking about all the different stocks I bought, including a new stock or two that I bought with that $50,000 here today, right? Now, the reason I'm doing that is because obviously stocks are getting devastated right now, and I see a lot of good deals in the market that I want to take advantage of, right? The issue is when assets start to decrease like that, folks like myself go out and buy those assets, right? Same thing could happen if real estate collapses. You could have definitely some real estate buyers go out and purchase that. But the issue is I go out and buy those $50,000 worth of stocks. That's $50,000 I'm not going out there to spend in the economy. I'm not going to buy a new car. I'm not going to buy a new watch. I'm not going to buy another house. I'm not going to buy furniture or whatever else I could be spending out there in the economy, or using that $50,000 on a vacation or something like that, right? I'm using that to buy stocks. That's not economically benefiting anything, right? But I see these prices being very decreased, and so I'm like, this is where I got to put money, right? And so as you kill the stock market, as you could kill the crypto market, as you kill the real estate market, people, especially a lot of investors, they say, I'm not buying this other stuff. I'm not going out there and spending money in the economy, which kind of leads to even a worse kind of fulfilling prophecy here, right? And people say, I'm going to put money over here, where that money is also not being really spent in the economy. It's being invested over here. And it's not really serving a purpose, but people look at it and like, these assets are insanely cheap, so this is where I'm going to spend my money here right now, right? And so, and then you have obviously an unwind of credit and a lot of different things like that. And so, in my opinion, the Fed, I don't know how many times they're going to raise rates this year, because here's the thing. As soon as that housing market starts to really, really slow in a real way, and as soon as the economic numbers start getting worse, I'm telling you, the Fed's going to have to backpedal, and they're going to backpedal quickly. Kind of like what has happened here with this whole, inflation's gone way worse than anybody really expected, including the Fed, right? It's gotten way worse, way faster. Now all of a sudden they're flipping, and they're like, oh, we got to raise rates. We got to do it fast. Man, and as soon as that housing market starts to collapse, and if you add on stocks continue to collapse on top of it, because this is the type of stuff, these moves in these big tech stocks, that starts to catch the Fed's attention. If you throw Apple onto the top of that, if they were to start to get hit, that gets the Fed's attention. And so, but anyways, obviously I'm a buyer of stocks out there, as I always am. There's just obviously a lot going on that is causing these stocks to go down, and big techs get hit viciously right now. And it was just mids and smalls at one point, but now it's everything. And it's hard to hide out almost anywhere now in the market. Hope you guys enjoyed this. As always, make sure to check out FTX US, first link in the description down there, my official crypto partner. Get yourself some free crypto. Use Holy Smokers as your referral code. Much love and have a great day.